just because you can measure something and guess it doesn't mean that it's the controlling variable in what you're dealing with in a messy world. And I don't think there's any substitute for thinking about a whole lot of investment options and thinking about why one is better than another and what the likely returns are from each, et cetera, et cetera. And the trouble with the hurdle rate concept, not that we don't have one in a sense, is that it doesn't work as well as a system of comparing things. In other words, if I have something available that I think will give me 8% for sure, and I can buy all I want of it, and you've got a perfectly good investment that I think will earn 7, I don't have to waste 5 minutes with you. You're like the mail order service offering the bride through the mail and she's got AIDS. You know, I can go on to some different subject. And so the concept of opportunity cost it's so little taught in investment. They teach it in the freshman course in economics in all the major universities, but when you get to the corporate finance departments and so forth, it doesn't lend itself to the kind of mathematics they want to use, so they ignore it. But in the real world, your opportunity costs are what you want to make your decisions based on.
Yeah, and even if you had something you were really familiar with and were very sure on the 8%, 8.5 wouldn't tempt you if somebody came along. That's a practical matter.
Sure.
I've been on, as I mentioned, I've been on 19 corporate boards. I would say that of the presentations I've seen, and I've seen a lot of them, and every one of them had a calculation of internal rate of return. You know, if they'd burned them all, the boards would have been better off. I mean, there is so much nonsense presented because the presenters essentially know what the listeners are desirous of hearing and what is needed in order to get through something that the CEO wants to do anyway. That you just get nonsense figures, and you know, we may get nonsense figures too, but they're ours. You know,
let me give you an example of that. I have a young friend who sells private partnership interests to investors, and he's in a really tough field where it's hard to get decent returns. And I said, "What return do you tell them you're aiming for?" And he said, 20%. And he said, "How did you pick that number?" He said, "If I chose any lower number, they wouldn't give me the money."
And there's no one in the world we think can earn 20% with big money. I mean, so anybody making a promise like that, basically, we're going to write off immediately. It's amazing to me what, you know, in a sense, how gullible big investors are, pension funds and so on, and that they have people come around and promise them the Holy Grail, and they want it so badly, you know, that they're willing to believe things that just have to be nonsense. Let's go to number 9.
Good afternoon, Mr. Buffett, Mr. Munger. My name is Robert Peyton, and I'm from Chicago, Illinois. Over your careers, has there been any question, either personally or professionally, that you haven't been able to get a comfortable answer to, that you cannot simply put in your too difficult pile? Thank you.
Charlie?
Well, sure, you get problems.
You may have just asked one.
Yeah. Sure, if you've got a child dying of some horrible disease, you have a problem you can't just put in a too difficult pile. So there are lots of things in life that come to you that where you have no option to not consider the issue. But where it's voluntary, like choosing one investment from many, then the too difficult pile is a marvelous way of sifting your daily grist.
Yeah, I have a file on my desk. Laura Graham gave it to me. It's entitled Too Hard. And as Charlie said, if something is optional and it's too hard, you just throw it in there. If you got the problems of weapons of mass destruction, it is too hard, but you have to keep wrestling with it, because if you even reduce the probabilities a tiny bit, you're doing something, but you're never going to solve it. You just have to keep working at certain types of problems. And you hope you don't have too many like that. 10.
Another many greetings from Germany. I am Bernard Jaden from Fluren-Winseln, a little town close to the Black Forest, and I'm the mayor of it. My question to Mr. Buffett and Mr. Munger is, how often do you review each single position in your portfolio? Some look at their stocks every day, sometimes more, some only once a year. What is your frequency? Thank you.
Well, that sort of breaks down into two periods of my life. When I had more ideas than money, I was thinking about every one all the time because I was thinking about buying the next one and which one I would have to sell in order to buy something even more attractive. So my opportunity cost, as Charlie would put it, then was the least attractive stock, which I would give up to buy something more attractive. So I literally, if I had $100,000 and it was all invested and I wanted to put $10,000 or $20,000 in something I felt was more attractive, I would be thinking all the time of which one of these do I unload. Now our situation is such that we have more money than ideas, and that means that we really aren't re-examining something every minute because the option is cash and not doing something that we really are excited about. We still think about the businesses we're in, whether they're wholly owned or whether they're partially owned through stocks. We think about them all the time. I mean, we've got a lot of information filed away in our minds, and you keep getting little incremental bits about that company or the competition or other things going on. So it is a continuous process, but it's not a continuous process with the idea that daily activity or weekly activity or monthly activity is going to result. It's just we want to just keep adding to our thinking, the knowledge, refining it further about every business that we're in. If we needed some money for a very big deal, for example, let's say we needed 20 or 30 or 40 billion dollars and we had to decide to sell 10 billion of equities, just to pick a figure, we would use the information we've been collecting daily, which hasn't really meant much as we've gone along, and then we would come to a decision about where we raise that $10 billion. Charlie?
Yeah, but even in Warren's salad days when he had way more ideas than he had money, he did not spend a lot of time thinking about his number one choice. He could put that aside and devote his efforts to other subjects.
I'm 17 years old, and this is my 10th consecutive annual meeting.
You must be a PhD by now, at least.
Mr. Buffett and Mr. Munger, I'm curious about what you think is the best way to become a better investor. Should I get an MBA, get more war experience, read more Charlie Munger almanacs, or merely is it genetic and out of my hands?
Well, I think you should read everything you can. I can tell you in my own case, I think by the time I was 10, I'd read every book in the Omaha Public Library that had anything to do with investing, and many of them I'd read twice. So I don't think there's anything like reading, and not just as limited to investing at all, but you just got to fill up your mind with various competing thoughts and sort them out as to what really makes sense over time. And then once you've done a lot of that, I think you have to jump in the water, because investing on paper and doing, and investing with real money, is like the difference between reading a romance novel and doing something else. So there is nothing like actually having a little experience in investing. And And you soon find out whether you like it. If you like it, if it turns you on, you're probably going to do well on it. And the earlier you start, the better in terms of reading. But, I read a book at age 19 that formed my framework for thinking about investments ever since. I mean, what I am doing today at 76 is running things through the same thought pattern that I got from a book I read when I was 19. And I read all the other books too, but you have to read a lot of them to know which ones really do jump out at you and which ideas jump out at you over time. So I would say that read and then on a small scale in a way that can't hurt you financially, do some of it yourself. Charlie?
Well, Sandy Gottesman, who is a Berkshire director, runs a large and successful investment operation. And you can tell what he thinks causes people to learn to be good investors by noticing his employment practices. When a young man comes to Sandy, he asks a very simple question, no matter how young the man is. He says, "What do you own and why do you own it?" And if you haven't been interested enough in the subject to have that involvement already, why, he'd rather you go somewhere else.
Yeah. It's that whole idea that you own a business, is vital to the investment process. I mean, if you were going to buy a farm, you'd say, I'm buying this 160-acre farm because I expect that the farm will produce 120 bushels an acre of corn or 45 bushels an acre of soybeans, and I can buy the fertilizer. You go through the whole process. It'd be a quantitative decision, and it would be based on pretty solid stuff. It would not be based on what you saw on television that day. It would not be based on what your neighbor said to you or anything of the sort. It's the same thing with stocks. I used to always recommend to my students that they take a yellow pad like this, and if they're buying 100 shares of General Motors at 30, and General Motors has whatever it has out, 600 million shares or a little less, that they say, I'm going to buy the General Motors company for $18 billion, and here's why. And if they can't write a good essay on that subject, they've got no business buying 100 shares or 10 shares or 1 share at $30 per share, because they are not subjecting it to business tests. And to get in the habit of thinking that way, Sandy would have followed it up with the questions based on how you answered the first 2 questions that made you defend exactly why you thought that business was cheap at the price at which you were buying it. And any other answer, you'd flunk. Number 11.